think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today, we're going to go through a somewhat simple lesson. Don't let this scare you guys off. I know we talk a lot about the macro outlooks and geopolitical risk and all those different things that affect our investments. But today we're going to get into a little bit of technical analysis, which I've done a few videos about. And I want to give you guys just some tools that'll help you just kind of decide when to jump into an investment or when you may want to sell an investment, depending on your outlook for that particular investment. For example, some people are not long on Bitcoin. Some people think that Bitcoin is going to zero. So they may not want to hold Bitcoin for a long term, but they may want to take some profits and be able to capitalize on some of the investments. So today, what we're going to look at is moving averages and how that can help you determine whether an investment is a good one or whatnot for you to get into. So without further ado, let's get into it. So here we're looking at a stock called Suncor Energy. The ticker is SU. You can see that here in the top left corner. This is a company I actually invest in. So I want to just kind of give you guys a stock pick that I'm holding on to. I expect oil and energy to go higher as we continue to see inflation, and as well as the energy crisis in Europe. And then now there's tensions in Kazakhstan, as well as Russia and Ukraine, which Russia does supply a lot of energy to that part of the world. So what we're going to do is look at Suncor Energy, which I believe they're based out of Canada. Canada has a lot of resources and stuff that they export. So that's who I'm invested in. So to calculate a moving average, usually people will use either the 1 day chart, or sometimes if you're a short-term trader or like a day trader or whatnot, you may use the 10-minute, the 15-minute chart. Or you could be a long-term holder where you may use the 200 day or the 200 month or 200 week. So it really just depends on what type of investor you are. But what you want to do is whenever you're taking for example, a 21 day chart, whenever you're taking this chart, you want to calculate 21 candles, the close for the day. So remember, we went through candlestick charts where this one closed in the red. So the close was here at the bottom of the bar. You want to calculate that for 21 different days since we're in the daily chart. And then you want to divide that by 21 to find the actual moving average. A lot of people don't do this type of math, but that's just kind of the mechanical way to do it. Here in TradingView, I mean, you can just type in the numbers that you want, and then it would actually draw the line for you and show you that moving average. So currently we're on the day chart. We're looking at the 21 day, the 50 day, and the 200 day chart. So the 200 day is the yellow, the 50 is the light blue, turquoise, and then you have the blue, which is the 21. So we're going to go ahead and take one off just to make it a little bit less confusing. So it doesn't look too noisy, and then we'll bring them back just so we can see. So usually with the moving averages, what it's showing you is that it's showing you a point of resistance, and it also shows you support. So for example, when a line is right here, this is below this bar, it closed here. This was a support line. So if you look on for that day, which I have to zoom in extremely to see that, but about $22.65 was support for that particular day, and it closed above support. So usually you can see what's going to happen. So for example, here on these two candles, it broke the support line for this particular moving average, which is the 21 day. And then we saw when it broke that support line, it actually trended downwards for a few days, and then it hit resistance up here, It broke through resistance, came back, hit support, then broke up. And so now we can see that right now support was about right here. And yesterday it closed above support. But I mean, depending on how you look at the chart, I believe that we are in heading in a market correction. We've seen quite a bit of action in the market, and I believe that oil will eventually get hit, but ultimately I believe it's going to go higher with inflation, and so it may just go down with the equity market just in general. So sometimes you'll have two charts. So for here, for example, so here you see the moving averages crossed a few times. Sometimes people see that as a bullish or a bearish sign. It just depends on who you are. But we added in the 50-day. So over the past 50 days, this has been the support line, which means that if the stock closes below support, it's usually bearish. And then when it hits resistance, and it closes above resistance, it could be bullish. So sometimes the stock could take off, but usually you're just kind of looking at those different things. So for this particular stock, we see that it just broke the 50 moving average support line, and then it closed above it the next day. So it did break through that for the 50 moving average for that particular day. And then when you look at the 200-day, based off the 200-day moving average, it broke support on, let's see, this was December 20th. It went down to about $22, and then it shot up. So, and if you look, at other places, for example, the 200 moving average goes all the way back to, it goes 200 days. So, and then if you change this chart to the weeks or the months, it'll go to 200 weeks or 200 months, which is a long time to be looking back. But some people may use that if they're a long-term holder and don't really want to sell their equities, they may use that. So as you can see, you could just see like how the moving averages become resistance. If it breaks through it when it's at the bottom, that's support. When it's above, that's resistance. So, for example, when it broke through resistance here, so this blue line, let's go ahead and take these two off. So the one line becomes support and resistance. So let's see. When it broke through here, so it went below the support line. It was here, close below. So here was support. It broke through. So over here, you can see it was some resistance. So it broke through resistance, went up, and this is the support now. So as this went up to about $23, the blue line became support. So then it falls down to hit that support line, and then it closes below the support line again, then it opens up lower, and it continues to trade lower. It does hit the resistance a few times, and then it eventually breaks the resistance again, goes up, the blue line becomes support again, and then it closes below support. And then you have some times where it broke that resistance a few times, and then it ultimately went down, and this became the new resistance on the way down. Then it breaks through resistance again, and, so on and so forth. So you can just kind of really just measure what a stock is doing based off the patterns and the psychology of the people that invest into a stock by using things like this moving average and everything. So I just want to give you all that tip for today. I am using TradingView. This is a platform that I am looking at subscribing to just as I get more into charts and get more into technical analysis. So I hope this is helpful, and y'all have a blessed day.